Strong economic data out of Beijing. According to a new report by the National Bureau of Statistics, China's industrial output expanded 6.8% year-on-year, with service sector growth hitting 8.1% in May. A sector-by-sector breakdown of the NBS figures reveals emerging high-tech industries drove strong economic growth. High-tech and equipment manufacturing sectors substantially outpaced last month's industrial average, with production of new energy vehicles, integrated circuits, and robots up 56.7%, 17.2%, and 35.1% respectively. At the same time, emerging service industries led by internet-related sectors contributed 56.8% to last month's service sector growth. Earlier this week, NBS spokesperson Mao Shengyong said robust emerging sectors and sustained gains in China's broader economy are directly linked to successful supply-side structural reforms. The head of NBS's Department of Industrial Statistics, Wenjian Wu, said the fact that high-tech industries are making up a larger share of total industrial output is a sign of more favorable conditions in the country. High-quality development spells big opportunities for investors, reflected by expanding investment activity across Chinese markets. Fixed asset investment rose 6.1% between January and the end of May, while private sector FAI climbed 8.1%. Much of that investment went to manufacturing, up 5.2%, led by investment in high-tech manufacturing and equipment, which jumped 9.7% and 8.2% respectively. Not to mention infrastructure investment, a major economic stabilizer, which rose 9.4% in the first 5 months of the year. The strong economic data reflects positive changes in the Chinese economy. The International Monetary Fund First Deputy Managing Director, David Lipton, said given China's record of successful reforms in the past decades, and the authorities' strong commitment and determination, he's confident China can rebalance to a sustainable growth model. Chinese business leaders say they are confident too. The Business Climate Index for Q2 held steady at 58.5%, 3.9 percentage points higher than the same period last year. With retail sales of consumer goods growing by 8.5% in May, companies are betting that strong consumer demand will continue to boost growth in China and around the world. From automobiles and crude oil to soybeans and medicine, the world's largest middle-income group is eager to buy. Imports of goods into China jumped 15.6% year-on-year in May to around $185 billion, with exports growing by just around 3.2%. Chief economist with Zhongtai Securities, Li Xunlei, said the shift in trade reflects shared benefits arising out of China's new development model. China, he said, has entered a new phase of consumption with rising demand. By cooperating with other countries in a more open manner, Xu added, China is seeing an improving external environment for its high-quality development.